Good evening and welcome to the Week in Review, where we give you updates and developments that occurred in the week at the global, African and Nigerian economic space. Let us begin with the current updates on the COVID-19 cases. At the global level, we have 3,459,491 cases, with 243,450 deaths and 1,103,163 recoveries. In Africa, the confirmed cases are 41,871, with 1,721 deaths and 13,760 recoveries. In Nigeria, confirmed cases are 2,170, with 68 deaths and 351 recoveries. We begin with the developing story. Vice President Professor Yemi Osinbajo, who is also the chairman of the Economic Sustainability Committee, says there's a silver lining in the COVID-19 pandemic cloud. He believes a lot has to be done in ramping up data of citizens for ease of disbursing areas like palliatives and supports to the economy. Vice President Professor Yemi Osinbajo disclosed this while featuring virtually on the Platform Nigeria program organized by the Covenant Christian Center and its convener, Senior Pastor Poju Onyemade. The Vice President believed that areas of focus for the government will be repositioning the economy post-COVID-19, and they would involve utilization of local resources and the creation of decent jobs. VP Osinbajo said mass housing schemes, agriculture, transportation, improving infrastructure, and supporting micro, small, and medium enterprises will form top priorities for the government as it moves and navigates through the COVID-19 era. He also said that Nigeria will come out stronger through the crisis as a nation. Now we bring you some of the key stories and reports from last week. We begin with the fact that the longest economic expansion in United States of America history officially came to an end on Wednesday during the week when the Commerce Department announced that the economy shrank by 4.8%, the first month of the year. The economic slump, the steepest since the last recession in 2008, is just an early indicator of how severely the coronavirus pandemic affected the U.S. economy. Much of the U.S. economy has been shut down in March in an effort to contain the virus, triggering 26 million people filing for unemployment benefits and wiping out a decade of jobs gains at the end of the first quarter. The next set of figures from the Commerce Department will more accurately direct and show how true the scale of the impact is. Kevin Hassett, senior economic advisor to the White House, predicted gross domestic product, the wildest measure of the economy, could tell at an annualized rate of 30% in the next quarter. Goldman Sachs expects a 15% unemployment rate in the U.S. by mid-year, up from 4.4% at present. The fall is the sharpest quarterly decline in gross domestic product since the end of 2008, when the economy contracted by an annualized rate of 8.4%. But on current forecast, the drop-off could soon rival the economic collapse of the Great Depression in 1932. The U.S. economy shrank then by 13% over the year. The U.S. economy is in recession now, said Gus Forcher, chief economist at PNC. We just don't know how deep, Forcher said while looking at the figures and the quarterly analysis of the U.S. economy. Most of the shutdowns happened at the tail end of the first 3 months of the year. PNC as an analyst group is expecting a contraction of about 30%, which will be by far the worst quarter in history. Mr. Forcher also expects the recovery to start soon after that, and for a strong rebound, if not as dramatic as the fall, once the virus is under control. Forcher said that while this quarter's figures looks bad, it is nothing here. PNC is also expecting a contraction of about 30% in the U.S. economy, which will be the worst ever in history for the country. When you look at the economic analysis from the PNC in the U.S., it also showed the devastating effect on the general economy of America. As we all know, America is the world's leading economy. Other areas that will be affected in these areas are key sectors in the economy like aviation, tourism, construction, amongst other critical sectors in the U.S. economy. During the week, President Muhammadu Buhari addressed Nigerians after the end of the second phase of the lockdown placed on Lagos, Abuja, and Ogun states. Here are some of the key highlights of his speech. It was announced that there will be an overnight curfew from 8 p.m. to 6 a.m., which means all movement will be prohibited during this period except for essential services from May 4th, 2020. There will be a ban on non-essential interstate passenger travel until further notice. Partial and controlled interstate movement of goods and services will be allowed for the movement of goods and services from producers to consumers. Government will strictly ensure the mandatory use of face masks or coverings in public, in addition to maintaining physical distancing and personal hygiene. Furthermore, the restrictions on social and religious gatherings shall remain in place, while state governments, corporate organizations, and philanthropists are encouraged to support the production of cloth masks for citizens. For the avoidance of doubt, the President said the lockdown in the FCT Abuja, Lagos, and Ogun states will remain in place until the new one comes into effect on Monday, 4th of May 2020. To support the businesses and traders, the monetary and fiscal authorities will deploy all the necessary provisions needed for production to continue and thus jobs restored, the President said. With regards to Kano State, the President directed the enforcement of a total lockdown for a period of 2 weeks with effect immediately. The federal government also assured Nigerians that they will deploy all the necessary human, material, and technical resources to support Kano State in controlling and containing the pandemic and preventing the risk of further spread to neighboring states. The President in his speech announced that the Presidential Task Force on COVID-19, chaired by Mr. Boss Mustafa, Secretary to the Government of the Federation, shall provide sector-specific details to allow for preparations by governments, businesses, and institutions. In respect to the above guidelines reeled out by the President's speech, state governors may choose to adapt and expand based on their unique circumstances, provided they maintain alignment with the guidelines issued. In the week, the Executive Board of the International Monetary Fund approved Nigeria's request. The near-term economic impacts of COVID-19, which are expected to be severe, while already high downside risks have increased, show that the outbreak will have an impact on Nigeria's economy, which is facing headwinds from external vulnerabilities and falling per capita GDP levels. The pandemic, along with the sharp fall in oil prices, has magnified the vulnerabilities, leading to a historic decline in growth and large financing needs. The IMF financial support will help limit the decline in international reserves and provide financing to the budget of Nigeria for targeted and temporary spending increase aimed at containing and mitigating the economic impact of the pandemic and the sharp fall in international oil prices. The IMF remains closely engaged with the Nigerian authorities and stands ready to provide policy advice and further support as needed following the Executive Board's discussion of Nigeria. Mr. Mitsushiro Furushawa, Deputy Managing Director and Acting Chair, issued the following statement as a result of their meeting and agreement to approve the $3.4 billion financing for Nigeria. The COVID-19 outbreak, magnified by the sharp fall in international oil prices and reduced global demands for oil products, is severely impacting economic activity in Nigeria. These shocks have created large external and financing needs for 2020. Additional declines in oil prices and more protracted containment measures will seriously affect the real and financial sectors and strain the country's financing. The authorities' immediate actions to respond to the crisis are welcome. The short-term focus on fiscal accommodation will allow for higher health spending and help alleviate the impact of the crisis on households and businesses. Steps taken toward a more unified and flexible exchange rates are also important, and unification of the exchange rate should be expedited. Once the COVID-19 crisis passes, the focus should remain on medium-term macroeconomic stability with revenue-based fiscal consolidation essential to keep Nigeria's debt sustainable and create fiscal space for priority spending. Implementation of the reform priorities under the Economic and Recovery and Growth Plan, ERGP, particularly on power and governance, remains crucial to boost growth over the medium term. The emergency financing under the RFI will provide much-needed liquidity support to respond to the urgent balance of payment needs. Additional assistance from development partners will be required to support the government's efforts and close the large financing gap. The implementation of proper governance arrangements, including through the publication and independent audit of crisis mitigating spending and procurement processes, is crucial to ensure emergency funds are used for their intended purposes, the IMF said. With the COVID-19 pandemic and its attendant effect on the world economy and the international capital market, the federal government reappraised its borrowing plan and decided that it would be more expedient to raise 850 billion naira, earlier approved as external borrowing from domestic sources. This conversion from external to domestic is to ensure that data borrowing, rather it is an amendment of source of borrowing from external to domestic. With this change, the total new domestic borrowing under the 2020 appropriation becomes 1,594,099,000,000 naira, which is the same as the total new borrowing in the 2020 Appropriation Act. For compliance with the law, His Excellency President Muhammadu Buhari forwarded requests to the Senate and House of Representatives to convert the source for raising the 850 billion naira from external to domestic. The Senate in the week approved the requests on Tuesday, April 28, 2020, while the approval of the House of Representatives is expected in the week. Upon approval of the request by the House of Representatives, the Debt Management Office would issue FGN securities in the domestic market to raise 850 billion naira, thereby providing high-quality investment opportunities for the investing public. From the National Bureau of Statistics, in the second quarter of 2019, Nigeria's real gross domestic product at basic prices grew by 2.12% on a year-on-year basis. The growth accelerated further in the third and fourth quarters by 2.28% and 2.55%. The steady increase in quarterly growth resulted in an annual growth rate of 2.27% for 2019 compared to 1.91% in 2018 on a year-on-year basis. Compared to the second quarter of 2018, the performance in 2019 indicated an increase of 0.61 points, while the third and fourth quarters were 0.47 percent points and 0.17 percent points higher, respectively, than the corresponding quarters of 2018. Household consumption expenditure in second quarter, third quarter, and fourth quarter grew by minus 1.33%, minus 3.7%, and minus 0.38% in real terms year-on-year. For 2019, the annual growth rate in real household consumption expenditure stood at minus 2.40% compared to 4.63% in 2018. Government consumption expenditure recorded growth rates at 11.92%, 16.20%, and 5.41% in second, third, and fourth quarter respectively year-on-year, while annual growth rate stood at 15.04% against 39.85% in 2018. Net exports recorded positive growth rates in all four quarters of 2019, a departure from the trend in 2018, while no change was recorded in second quarter 2019. Net exports grew in real terms in third and fourth quarter by 17.94% and 3.4% respectively. On an annual basis, net exports grew by 7.64% in 2019 compared to minus 17.43% recorded in 2018. National disposable income grew by 1.44% in the second quarter of 2019, but recorded negative growth in third quarter, minus 0.61%, and fourth quarter, minus 1.46% on a year-on-year basis. For 2019, growth in the national disposable income stood at 0.38% compared to 1.03% in 2018. Compensation of employees during the second, third, and fourth quarters of 2019 grew 10.71%, 11.23%, and 9.79% respectively in real terms on year-on-year basis for 2019 growth rate, which stood at the April 2020 Nigerian Capital Market Service report. A rich, deep analysis from it shows the following. The Nigerian equities market closed the month of April 2020 in green as market witnessed bargain hunting during the month under review. The NSE ASI inched up by plus 8.08% as against minus 18.75% loss recorded in the month of March 2020, while the NASD USI closed northwards with plus 1.16% gain recorded at the end of the month under review as against minus 1.10% loss in March 2020. The gain recorded in the NASD OTC market erased the loss recorded in the previous month. Year to date, the NSE ASI has dipped by minus 14.24%, while the NASD USI inches up by plus 0.46% so far in the year. On market development regulations and investors' protection, the Securities and Exchange Commission published guidelines for the issuance of fixed income securities by statutory bodies in the WASRA member guidelines. This move is expected to help achieve the objectives of fostering capital market integration in West Africa. Also, the Nigeria Stock Exchange has proposed an amendment to its listing requirements to ease activities in the market. The amendment bill by introduction. The report captured some changes due to COVID-19 in the markets. First, we begin with virtual meetings. With COVID-19 being declared a global pandemic by the World Health Organization, constituted authorities, health experts, and Centers for Disease Control have had to preach about hygiene and social distancing to reduce the spread of the virus. Businesses and its regulators also had to begin to do things differently in compliance with the guidance from the health regulators. This is, in a nutshell, brought about a new way of organizing annual general meetings and how they're being held and conducted. The Corporate Affairs Commission in March 2020 issued guidelines for the conduct of AGMs using provisions that align with the current tide. The details of the guidelines can be found in www.proshareng.com Capital Market CSE Issues Guidelines report. GT Bank, quoted company in the capital market, was the first listed entity to hold its annual general meeting following the guidelines provided by the CSE. Other entities who followed suit were 9 companies that held their AGMs virtually in the month of April. The 9 companies who did this include Custodian Investment PLC, April 15, 2020, Africa Prudential PLC, April 28, 2020, United Capital PLC, April 28, 2020, United Bank for Africa, April 29, 2020, Transnational Corporation of Nigeria PLC, April 28, 2020, Transcorp Hotels PLC, April 28, 2020, FCMB Group PLC, April 28, 2020, FBN Holdings PLC, April 28, 2020, and Access Bank PLC, April 30, 2020. In terms of stocks trading at high and low, analysis on stocks trading at year high and low reflected that 11 stocks were trading at their year high as at the end of April 2020, while 34 stocks traded at their year low within the period under review. Performance review of the stocks trading at the year high showed that they all recorded positive year-to-date returns. Eco Corporation led the list with plus 41.18 year-to-date gain. On the other hand, 29 stocks trading at the year low recorded negative year-to-date return, while 5 closed flat. Looking at the analysis, the 11 stocks that traded at the year high were led by Abbey Mortgage, Better Glass, and Eco Corp, leading the results, while Academy Press, Arbico Engineering, and Austin Labs Engineering led the stocks that traded at the year low. For the penny stocks, analysis on stocks listed revealed that 109 stocks are currently trading as penny stocks as at April 30, 2020. For the purpose of this analysis, stocks trading below the share price of 5 naira are considered as penny stocks. Out of the 109 penny stocks, 12 recorded positive year-to-date return, 58 recorded negative year-to-date return, while 39 remained flat. Law Union Company topped the list of penny stocks with plus 100% and plus 40.91% year-to-date returns, while Sky Aviation led otherwise with minus 65.39% and minus 55.56% loss, looking at their results. For gainers and losers, a review of the list of advancers and decliners during the lockdown period reflected that 52 gainers were recorded, while 27 losers were also recorded. GlaxoSmithKline and May & Baker led the list of gainers during the lockdown, while Sky Aviation and CI Leasing led the list of losers during the lockdown period. Looking at the performance of key exchanges in the month of April 2020, the FMDQ Securities Exchange closed with a debt market size of 28.96 trillion naira. The Nigeria Stock Exchange closed with a market capitalization of 26.04 trillion naira, while the NASD OTC market closed with a capitalization of 514.74 billion naira. In all, the April 2020 Share Service Support Quality Report is a snapshot and aid memoir of developments in our markets, tracking milestones that the investing public should be aware of. Do feel free to share your opinions and observations and feedback with us via research@proshareng.com. And that will be all for this edition of the Week in Review. You can visit our website www.proshareng.com to get more updates from our news stories and videos. ProShare, Nigeria's leading information hub, has packaged for you a platform that gives you credible and reliable market data and analysis of the impact of COVID-19 on the global and Nigerian economy. Log on to proshareng.com/COVID-19 and you'll get all those analysis and data you need. You can also follow our social media platforms showing on the screen for further updates on our market reports. Till we come your way again, thank you for watching, have a nice day, and stay safe.